Robinhood stock has been one of the most closely followed names in the market over the past few years, but recently it has reached a new level of attention. Over just the last 2 trading sessions, the share price has surged from around $121 to more than $143, reaching intraday highs well above that. These moves aren't just about a single day's news. They are a reflection of a deeper shift in how the market views Robinhood, and they highlight a story that extends far beyond any one headline. As we step back and look at what's going on, it becomes clear that Robinhood is entering a new phase, and the question for investors now is what that phase will look like, how long it can last, and what to watch for next. The starting point is the company's transformation. Robinhood began as a commission-free trading app that upended the brokerage industry. For a while it was seen primarily as a meme stock platform, the place where the GameStop and AMC frenzy played out. That reputation brought massive growth but also skepticism, regulatory scrutiny, and a sense that the business model might not be sustainable. Fast forward to today, and Robinhood is being talked about as a potential everything app for finance, a single platform for investing, banking, crypto, and even access to private markets. This shift is not just marketing spin. It's reflected in the company's products, its partnerships, and now its position in the stock market itself as an official member of the S&P 500 index. That index inclusion is a major reason the stock has been surging. When a company enters the S&P 500, every index fund and ETF that tracks it must buy the stock to mirror the index. Those purchases are not instantaneous. They are spread out over days and weeks as portfolio managers rebalance and allocate capital. That creates a steady stream of demand that can push the share price higher. In Robinhood's case, the inclusion was seen as a milestone of legitimacy, a sign that the company had moved beyond its scrappy startup days and into the ranks of established American corporations. That legitimacy attracts a different type of investor, one who is looking for exposure to mainstream fintech rather than speculative trading. The inflows tied to this structural change have provided a powerful tailwind for the stock, and they continue to play out in the background. But index inclusion alone wouldn't explain the enthusiasm we're seeing. Another critical factor is Robinhood's push into new products and services. The company recently announced Robinhood Ventures Fund I, a closed-end venture capital vehicle designed to give retail investors exposure to private companies. This is a bold move. It opens up an asset class that has historically been reserved for accredited investors and institutions, and it signals Robinhood's intention to democratize more than just stock trading. Combined with its plans for Robinhood Banking, offering checking, savings, estate planning, and even perks for premium users, the company is laying the groundwork to become a comprehensive financial platform. It is no longer just about zero-commission trades. It's about capturing more of a customer's financial life. The market likes that story because it suggests multiple revenue streams. Transaction-based revenue is inherently volatile. It rises and falls with trading volumes, especially in crypto. By adding wealth management, banking, and venture products, Robinhood can smooth out that volatility and grow in ways that don't depend solely on meme stock mania or Bitcoin booms. That diversification makes the business model look more durable, and it justifies a higher valuation multiple in the eyes of growth investors. We also can't ignore the broader macro environment. The Federal Reserve recently cut interest rates by 0.25% and signaled that more cuts could be coming later in the year. Lower rates tend to encourage risk-taking. They make equities, growth stocks, and crypto more attractive relative to cash and bonds. Robinhood sits right at the crossroads of these asset classes. While it does earn some net interest income on customer balances, its real engine is customer activity, people trading, transferring, experimenting with new products. A risk-on environment is good for that, and the Fed's shift toward easing policy has given all of fintech a boost. Another catalyst has been Robinhood's success in new business lines such as prediction markets, where contract volumes have reportedly crossed 4 billion. This segment is still in its infancy but growing quickly. It taps into the same behavioral energy that fueled Robinhood's early growth but applies it to a new category. Investors see this as evidence that the company can innovate and find new engagement levers beyond traditional equity trading. When you add up index inclusion, product diversification, macro tailwinds, and new growth engines, you get a narrative that is much bigger than just a 2-day rally. Technical factors have also contributed. Robinhood's chart has been flashing strength, with higher highs, solid support levels, and strong volume on up days. These are the kinds of signals that draw in momentum traders and algorithmic funds. As the price crosses key psychological levels, 120, 130, now pushing toward 140, it triggers buy orders, short covering, and further inflows. That self-reinforcing loop can take a stock much farther than many expect, at least in the short term. Still, an evergreen perspective means we have to talk about the risks as well. Robinhood's valuation has expanded dramatically with this rally. A forward price-to-earnings multiple above 40 implies high expectations. Any stumble in execution, slower than expected uptake of new products, or a downturn in crypto markets could create a sharp pullback. Regulatory risk is another ever-present factor. As Robinhood moves deeper into banking, tokenization, and alternative assets, it invites more scrutiny from regulators. Headlines about investigations or enforcement actions could shift sentiment quickly. Investors should also remember that index inclusion inflows are finite. Once funds have bought their required positions, that structural demand fades. If active managers decide to take profits or rotate into other names, the stock could lose some of its upward momentum. And while product diversification is promising, it's not yet proven at scale. Banking services, venture funds, and prediction markets all require careful execution to deliver sustainable revenues. So how should an investor think about Robinhood today? The key is to separate the long-term transformation from the short-term price action. The rally from 120 to 140 plus is impressive, but it's also just a snapshot of market enthusiasm. The real story is that Robinhood is evolving from a commission-free trading app into a full-spectrum financial platform. If the company succeeds, it could justify its valuation and perhaps grow into something even bigger, a sort of financial super app for retail investors. If it stumbles, the downside could be painful given how much optimism is already baked into the price. For a video framed to last beyond the news cycle, you can position Robinhood's surge as evidence of this transformation rather than the transformation itself. Explain how index inclusion signals legitimacy, how new products expand the business model, how macro conditions support risk-taking, and what metrics will tell us whether the strategy is working. You can highlight the rally but anchor it in the larger question: is Robinhood entering its next chapter as a mainstream financial powerhouse? That question will remain relevant weeks or even months from now. In that context, it's useful to give viewers a checklist of what to watch. First, keep an eye on user growth and assets under custody. These metrics show whether new products are attracting customers and capital. Second, monitor average revenue per user. Rising ARPU would confirm that Robinhood is successfully monetizing its expanding platform. Third, track trading volumes, especially in crypto and new categories like prediction markets. Fourth, watch for regulatory headlines and analyst revisions. Upgrades or positive coverage could provide a tailwind. Warnings or investigations could do the opposite. Finally, keep an eye on technical levels for signs of whether momentum is continuing or stalling. Pulling all of this together, the cautiously bullish view is that Robinhood has legitimate tailwinds and is undergoing a real evolution. The company is not just riding a speculative frenzy. It has catalysts that are structural, from index inclusion to product diversification. It has macro conditions in its favor, with the Fed pivoting to cuts. It has technical momentum confirmed by volume and institutional flows. These factors create a setup where further gains are possible if execution stays on track. But the risks, valuation, regulation, and the finite nature of inflows mean investors should stay alert. The market has a way of overshooting in both directions. Robinhood was once dismissed as a fad. Now it's being celebrated as a future financial powerhouse. The truth will likely be somewhere in between, revealed over the coming quarters as new products launch and revenues evolve. For now, the stock surge reflects more than just hype. It reflects a company that has made real changes and a market that is reassessing its potential. Whether that reassessment ultimately proves justified will depend on execution, but for the moment, Robinhood is showing what can happen when narrative, fundamentals, and flows all line up. That's why this story has legs beyond today's chart. Even if the stock consolidates or pulls back, the underlying transformation is ongoing, and the metrics we've discussed will continue to matter. Investors who focus on those fundamentals rather than the daily price swings will have a clearer view of whether Robinhood truly is entering its next chapter as a mainstream financial powerhouse.